Yo, what's up, guys? Welcome back to the channel. In today's video, I'm going to go over the trades that we took on Friday as well as the game plan going into this week and what we're going to be looking for. So if we go to the 30-minute, this is what we look like. We obviously have I'm pretty sure these are actually the wrong contracts. I think these are supposed to be the 570s. Yeah, the 570s. So we got the 570 calls, and then we have the 560 puts. If we get a gap up, then we'll probably get the 575s possibly. So kind of depends on the open tomorrow of what contracts we're going to get. But at the moment, on the call side, we're obviously bullish because this 10 SMA here is about the 50 SMA, and these are crossed. So that means the market's trading bullish since we're crossed on the call side. And what we're going to be looking for going into this week is obviously the focus is going to be on the long side. If we look here on the higher time frames, though, we do still have this 4-hour 50. I'm curious to see if this is just going to slam down and we're not going to get the cross and go higher, or if this is going to cross the 50 curls and we get a rip. So pretty much we're still going to be focused on the long side until this 30-minute chart here goes negative. So with how we look right now, bullish going into the week, looking for a 0-day cross on calls, 50 dip on calls. I'd imagine that we're probably going to get a pullback to this 50 again this week, maybe tomorrow, depending on how we open up. And if we do, that's a major pivot point. If we hold the 50, watch for either a call cross after we hit the 50, or if the puts are crossed when we do come into this 50 SMA, just watch for a negative cross. That's probably the best way, in my opinion, to play these 50 bounces. Is if my favorite, I think that's one of the best setups. If we come down to that 50 SMA on the 30-minute and we are crossed on puts and that chart goes negative on puts, that's such a good setup to go long, because we know that the bulls are going to be holding the trend since the puts are going negative, and that's a really good long entry. That's a really high confidence type of trade, and yeah, that's what we're going to be looking for going into this week. Obviously, like I just said, 0-day cross on calls, 50 dip on calls will be the trades. Let's say this chart doesn't hold the 50 SMA and we go negative, and that flips the market neutral since the bulls are going to lose the trend. And if you obviously go to the put side, these aren't going to be crossed, so that means neither side has the trend and we're neutral. So from there, we just look for a 0-day cross on either side of the premium, and a lot of the time, since the bulls are losing the trend, this is going to get a move lower if we do cross negative here on the 30-minute chart. So from there, you just look for that 0-day cross on the puts. And usually, you could buy that 50 SMA dip on the 0-day chart on puts if this chart is going negative on the initial cross down, on the initial negative cross of this chart from going from one trend to neutral. On that initial negative cross, you could buy the 50 dip on the 0-day chart. So that's the only time. That's why I emphasize the the initial cross down. Once we get a solid move after the negative cross, I'm not buying the 50 dip on the 0-day chart, because we know the market's neutral and you don't buy it at that point. You can only buy it on the initial negative cross of the trend getting lost. So hopefully that makes sense. That's what I'm gonna be looking for going into this week. I'm kind of going backwards. I usually go over the trades that we took on Friday first, but that's the plan going into this week. Obviously, higher time frame charts are still crossed. 1 hour is crossed. We got the 2 hour that's crossed. So until this changes, until this 30-minute trend changes, focus will be on the bulls. And yeah, so on Friday, this is what the 0-day charts look like. Again, Friday was a sleeper day. This whole week, really, there wasn't much going on. There really wasn't. This is an absolutely disgusting chart. It just doesn't look great. So if we go here, where did we open up at? 9:30. We opened right in this area. Obviously, there's nothing to take anyways here off of the first 20, 30, even first 2 hours. Actually, there's nothing to take. So I always sit out the first 15-20 minutes. After that, then we look for a trade. So once we start coming up in this 50 here, I was looking for a call cross because we know the 30-minute trend's bullish. And what do we look for? We look for a 0-day cross on calls, 50 dip on calls, and you don't take a trade until we get one of those setups. And you could be like, oh, we keep rejecting this 50, I'm gonna short it. No, that is the last thing you want to do. Saw someone in the Discord say that in the free chat, but you do not want to be playing rejects against the trend on the 0-day chart. That's just a recipe to get absolutely destroyed. Even though, yeah, okay, we wicked off of it a few times, but that's just not how you trade the system. It's just not how you trade it. You gotta trade it the right way to do well. And what do we look for? We look for a call cross, and this call cross right here, we end up getting a massive news candle. So that kind of really did mess up this cross. That's kind of why it didn't really play out, in my opinion, because we had a massive news candle that pumped us super 140 to 260. That kind of did just mess up the cross. We got an explosion above. We crossed. If you bought this 10 pullback, you probably got some points. Nothing too crazy. You're probably up 30 to 40 points, and that wasn't enough, in my opinion, to be a winner. But If you got stopped at break even, is what it is. I mean, once we broke below the 10, you would have known to close it. And then when we came down this 50, not buying this 50 dip, that 50 SMA is sloped down. So in this case, would not be buying that 50 SMA dip. You got to know when the 50 sloped down, I would not be buying the 50 dip. The 50's got to be trending up. When it's trending up, that's when you want to be slapping the 50 dip. But in this case, it wasn't. And then, you know, we broke below the 50, got back above and recrossed, and this gave a little move, nothing crazy again. We got this initial cross here at like, what, 2 o'clock, and it, you know, made a little move higher, nothing crazy. It's been a weird bull trend because the move has been, you know, it's been a choppy move up, hasn't been clean at all. So only trades really would have been if you bought this 10 dip. You know, you would have been stopped probably at break even. You shouldn't have taken a loss on this because if you bought right here and sold on the closure below, you would have been in profit still. And then if you took this cross again, you would have been stopped probably at break even. You would have bought down in here at like 2 o'clock. And then we got a nice pump up, and once we get this move all the way up here, I'd be moving that stop just based on how the price action's been, and you would have been stopped at probably break even. Maybe you could have squeezed like 40 to 50 points, I'm not exactly sure, but I didn't take it, wasn't really watching it at the time. So yeah, that's what you could have taken on Friday. Again, you know, not much going on this week. It was very slow. You just got to know how to navigate when the market is a little choppier. You got to, you know, risk a little less. Even though we do have trend, you could just recognize that this price action isn't favorable. When price action isn't favorable, that's when you want to be risk off, you know, maybe take less trades. Like on Friday after we got this funky looking cross, I did take this on Friday. I didn't get the best entry. I actually stopped break even on this before it ended up bouncing. I think I got an entry somewhere on this candle right here, and I took an entry. I wanted it pretty much just to go directly in my favor, and if it came back down to my entry, I got out at break even, and I did. So, you know, I didn't, you know, I called this trade out, and I was pretty much out of it immediately because I got in, got a nice bounce. I was up like 20 points, I think, right off the bat, and then it came right back down to my entry, and I just got out because I just didn't really like the price action, didn't like how it was going. So, you know, is what it is. I'm not going to force trades. That's another thing. This week, didn't really call that many trades out on the Discord. I'm just not going to force trades when I know action isn't favorable. And if I miss a move, I miss a move. I really don't care. There's always going to be another trade, and I'm only dropping trades that I'm really confident in. And yeah, that's that. So if you guys are wondering why I didn't drop that many this week, that's why. Like, I'm not forcing trades every day like some other people out there that, you know, just to try and catch a move. Like, I know the market's not good, and, you know, if you guys can't have that discipline, then, you know, maybe, you know, you got to rethink how you trade because it's all about the discipline. If you can't have that, then you're just not going to do well. So kind of want to like show that in the Discord. Like, I'm not going to be forcing trades. Like, if there's a trade that's that there's a setup like this cross, okay, yeah, it's a setup to take, but it's like you don't need to take it. You don't need to take every single trade the system gives. That's another thing. I always say this. It's probably a repeat if you guys are watching the videos, but like, you don't have to trade every trade the system gives. Like, the system will give you like 1 to 2 trades a day, and that's a good thing. It will help you not overtrade. But another thing is, like, you don't have to take every trade it gives. That's the thing. Like, you got to understand that. If you get a nice move on a trade and we're neutral and like the market's not moving the best, okay, take your points, pack it up, move on the next day. Just repeat that process. So yeah, it's a little bit of a ramble there, but that's what we did on Friday. That's the game plan going into this week. Pretty simple. We'll have to see how this week goes. Hopefully it's better. I think we have FOMC this week, so maybe we'll get funky action again. Who knows? But yeah, I can't wait for the market to pick back up. Like, the last, like, when was it? When the market was moving 1,000,000 points a day, that was obviously a little too much. But, you know, a little bit after that, market died down a little bit, and we got some good moves, and now we're just getting like choppy action. So hopefully we get some better price action this week or next week, just so that we can catch some good trades. But yeah, that's all I got. Drop a sub if you guys want to learn. Join Discord down below. It's where all the trades are shared. All the knowledge on the system is in there. And yeah, I'm out. Peace.